We got a little chop, a little swing in the NASDAQ. That's the main event, as we've seen equities in the tech category slip a bit. Joining me, Caroline Woods, back with us from New York, and Dan Grant, Senior Specialist of Retail Trading, here with me in Chicago. All right, we have, again, kind of saw tech drop, Caroline, but, you know, trying to buy some dips here a little bit. We're hanging in there.
Well, the big question was, can the rotation continue, right? And a couple days doesn't necessarily make a trend, but it's getting there. We're continuing to see that rotation out of big tech into small cap stocks, hence why the Russell is up almost 2% and the NASDAQ has turned lower. The Dow hit new highs, but it would be even higher if Microsoft wasn't weighing on it so much. So just taking a look, Amazon, the only one of the Mag 7 higher. Obviously, Prime Day kicks off today. My AI watch list all lower aside from TSM. NVIDIA losing today, although you never know with NVIDIA, but in the red right now. In terms of some of the bright spots, industrials, materials, healthcare, but also financials. We saw Morgan Stanley turn higher, but also Bank of America higher on earnings. But take a look at some of the regional banks as well. PNC is up 3% after earnings. We see Ally, Synchrony, U.S. Bank all higher ahead of earnings tomorrow. KeyBank, M&T, other standout performers as well. I will say the worst performer on the Russell, which is the outperformer today, is Funko, which Oliver randomly always makes me think of you. I think you actually introduced me maybe to the company, but it was a pretty big winner this year, and it's really sinking today. It's down about almost 15%, kind of a standout. And it's not an overall toy weakness that's bringing it lower. I saw that Hasbro and Mattel both higher, as is GameStop, which is where you can actually buy those Funko collectibles. Right. So that stood out to me. And also one of the best performers on the Russell, Chegg, which we only talk about in negative light. It's such a low-cost stock that, you know, any move is, you know, just kind of sense. But it's up 15% today after an upgrade from Morgan Stanley, even though they cut their price target. So thought I should point that out. We can finally talk about it in a positive light. Yeah,
nice. I like it. Some Russell movers for us. A little small cap recap. Thank you, Caroline. All right. Yeah, Chegg, pretty good move there. Finally bouncing back. Market kind of taking a stab at some of the stuff that's been seemingly long forgotten. Obviously, a lot of this has to do with the expectation for rates, Dan. I mean, there's no mistaking the market's interpretation of the next year now as being a giant relief to companies with debt, no profit, et cetera.
Yeah, and then potentially significantly lower rates between now and the end of the year. The 5-year note down at the bottom of the curve at 4.1, the 2-year note low at 4.45. I think that's the lowest since February. They're starting to price in more than just one cut, and that's, as Powell says, no signal when the rate cuts are coming. I thought that was kind of significant. And then this rotation trade is pretty significant, I think. The Dow and the Russell breaking out. It's parabolic.
Well, yeah, that's what, even as tech faded, S&P futures just put in the high for the morning. So, you know, we're balancing it. To the point about Powell, did you think his interview yesterday and his commentary with David Rubenstein offered any further encouragement on the front of, you know, predicting what he's going to do?
Not that I saw, no.
You talked about jobs being pretty soft, though.
Yeah, I mean, jobs, but we're not talking about government spending cuts at all, or drawing down some of that spending, so that there would be some room to cut, more than just the one cut, 25 basis points.
You know, this time around, think about all the times that we have been pricing in rate cuts and have gotten a massive head fake. This time
disappointment better, right?
100%.
Yeah.
But in none of those really did you ever see the Russell move like this, the equal weight. You know, there's something different about it this time. Do you sense that at all?
Yeah, that they're starting to price in and they're going to get them is what the broader market is saying.
Okay.
I don't know if you'd agree or not.
Well, no, I think you're right. I think that's basically what it is. I think the market is saying we're going to get rate cuts and we're going to do it without a recession.
And gold making new all-time highs. I don't know if that's really a barometer of anything, but I think it's interesting.
No, that's important. That's important too. We had the big Bitcoin rally the other day, but that kind of came back down. Gold's just been solid throughout the last, you know, all year basically. I'm thinking about the rest of this week, Caroline. I mean, we've got a few things to look forward to. Retail sales from this morning really solid. I do wonder if that kind of puts pressure on some of the jobs data this week to at least meet expectations and not slip. Maybe encouraging after so many missed data points. You know, this morning's retail sales print was pretty darn good.
Yeah, it's good news, and it's showing that the consumer isn't cracking, at least not right now. So I think that, that's positive. We're getting those rate cuts, but hopefully it won't be because the economy is weakening substantially. I think that I would say that I think yesterday's Powell was the clearest that we've ever really heard from him that rate cuts are coming. He's seeing the data. Obviously, they're going to be data dependent, but focus on the cooling labor market. Doesn't need inflation to come down to 2% before cutting. It seemed pretty clear to me. That being said, the talk around here is that earnings is really going to be the real test to see if this rally can kind of continue.
All right now we're at the highs of the morning. Russell, S&Ps, everything except the NASDAQ really cranking, but even the NASDAQ trying to bounce back. Good stuff. Thanks, Caroline Woods. Thanks, Dan Grant. Appreciate the thoughts, the commentary.